Welcome back to another live stream. Today we're doing a private live stream, and I'm going to talk about a few things. Number one, I want to talk, give a question or an opportunity for questions that you might have, sort of an Ask Me Anything. But what I'd also like to do is, and I'm just throwing this one out there to all those of you who joined this private live stream as a thank you to you. There's a stock that I would pay attention to. I don't have any exposure to it, so I'm not trying to imply like I'm pumping anything. I don't know that now is the right time. But there's a stock, I haven't seen a company this bullish in their earnings calls in quite a while. And I just want to draw your attention to it because it's trading for about a 0.55 peg. So I want to touch on that. We'll do some Q&A in just a moment. But let me show you this first. Why? The darn screen. That's annoying. It was just working, and now it's not. That's okay. I'll get that fixed. I'll pull it up on a different computer. This company is Restoration Hardware, and Restoration Hardware is trading for about a 0.55 peg, probably because nobody wants to buy a furniture company going into a recession, right? If we're going into a recession, we don't know that we are. Maybe we are, maybe we're not. But what's remarkable is the company actually says in their earnings call what they think a price target's going to be for their stock. I'm just pulling it up on a different computer right here, and I think it's incredible. Look at this. I haven't seen this from a company in a while. This is pretty bullish. This is now back in December, so this is before some of the volatility. We're going to have another earnings call for them coming up, and I think the stock could go down before it goes up, but I just want you to have it on your radar. If we go into a recession or things go poopy, I think you could probably get a really good steal on this one because they're laying some interesting foundations. I'm going to show you what I'm seeing. So first of all, they say, these are their words, they're creating the investments right now to quote unquote create the most significant shareholder returns. They say our math would tell us that what we're doing is going to be exponentially more valuable than buying our stock at $295 when we think it's going to be worth $1,200 to $2,000 down the road. So here's Restoration Hardware telling you they're, thinking they're going to be, a 5 to 8x stock. And this is really interesting because, Restoration Hardware has been so hated partly because home, transactions are plummeting, like real estate volume, not necessarily prices, unless you're in some of the COVID markets, HouseHack's not. But Restoration Hardware is spending a lot more on infrastructure and sort of CapEx to build out their brand, while at the same time, they're finally doing something I've been waiting for them to do, which is lower their prices. Now keep this in mind, if you're not usually part of the course member live streams, this is the kind of analysis that we like to do on a daily basis in the course member live streams, which, I'll only mention this quickly here. You could join with sort of a very low monthly membership. If you go to meetkevin.com, it's like less than $2. It's like, I think it's less than $1.70 a day or whatever. You get all the courses, trade alerts, private live streams, alpha reports, and everything. But this is sort of a freebie here, and I'm throwing this one out just because I love y'all. I really appreciate you being here on a Sunday. But look at some of their financials as well. So something that I notice at Restoration Hardware is, first of all, again, they're trading for a peg right now that's like 0.55. So really, really cheap. They're pretty hated right now. They ran up to like 450. They're back at like 240 or whatever right now. And I think they'll go even lower. But it's a sleeping giant where part of me is like, I'm kind of tempted to like pick up a few shares just to watch it. So when you look at your portfolio, you have like 1 or 2 stocks and you can kind of like remind yourself daily, oh, that's right, there's Restoration Hardware. It's fascinating. But again, in their earnings call themselves, they're talking about how they think they're going to be, a 5 to 10x. They talk about how they don't want to do automatic buybacks on their stock. They like doing buybacks when they think the stock is cheap, like in the 200s. This was in December. Okay, so this is kind of an old earnings call because they've got earnings coming up again, and I hope they tank so I could buy them cheap. That's sort of just my thought. I don't have any options or stocks on them or whatever. But they talk about how they're expanding the brand with disruptive pricing and basically how they still want to maintain that sort of brand of, hey, we are Restoration Hardware, that sort of like classy brand or whatever. And they bag on companies like Wayfair. They literally talk about how, why do people pick a BMW or Mercedes versus a Chevy or Tesla or whatever? It's because of the value that people place on a brand or the trust that they have for the people involved. Everything they're talking about in their earnings call, this idea of investments into Paris and London and capital investments, I'm pretty excited about. See, their cash flows are negative right now. Technically from operations, they have positive cash flows. You can see that here on screen. But they're spending so much on CapEx, $180 million just in the last, 9 months, which is somewhere around 40% more than what they spent last year over the same period. These people are investing. So if there's a company that's building a strong foundation, in my opinion, during, a pretty rough macro time that nobody's really talking about, in my opinion, it's Restoration Hardware. They've got about $87 million in cash, about $1 billion in inventories, but I always discount inventories anyway. And they've got current liabilities about $900 million bucks. So it's not like they're cash rich. It's worth paying attention to that. This is not a cash rich company. They're a furniture company. So they spend a lot of money, but they have good margins on their furniture, right? The cool thing about that is they have room for what I call margin compression, just like NVIDIA does. See, the NVIDIA is another one that I love. They're selling for like a 1.3 peg right now. And they're going to fall out of favor in this whole like AI bubble thesis that everybody has. But NVIDIA has the room to drop prices for their products a lot and still have really incredible margins. So NVIDIA and Restoration Hardware are really interesting, not necessarily where the prices are now, but in that they're trading very inexpensively based on current Wall Street estimates. And I think any additional volatility coming to these stocks will actually make them more delicious to pick up. And they could be really big opportunities. I don't have exposure to either of them right now. So again, like I'm not paid to say anything. I don't care if you buy the stock or not, NVIDIA or Restoration Hardware. I'm just putting it out there that it's fascinating that you are getting some companies with these margins. Enphase is obviously an example of one that's just been bleeding out forever. But all of those companies, what do Enphase, Restoration Hardware, and NVIDIA have in common? They have a lot of pricing power for their product, but they're in a macro environment where it's less ideal for the stock to be euphoric. NVIDIA had its run. Restoration Hardware is facing the low volumes of real estate. That'll change when rates come to zero again. It might take a little bit of time, but it'll happen, especially if there's a panic. And then, of course, same thing with Enphase with pricing. So here are 3 high pricing power, high margin companies really beat up by macro, where they're already juicy, and I think they're going to get even juicier going forward. And if I had a sticky note I should honestly have a sticky note on my desk for like cheap, high margin businesses. Those 3 would be on it. I'm going to put it down right now. Big margin PP stocks. All right, we'll do it together really quick. So, big margin pricing power. Where the cool thing about that is you could drop prices, but when you have big margin, you can actually just beat up your competition. And that's what Restoration Hardware talks about. I'll write that. I'll write this note in a second. You already know what I'm going to write, but I'll show you that in the earnings call, which I thought was so interesting. And we'll dive into some Q&A and stuff in just a moment. But what I thought was so interesting also, where was it? Targeted product transformation, blah, blah, blah. Let me find it really quick. It's to be scrolling, so I put it away for a sec. Sometimes people get dizzy when I scroll too much here. And then we can talk HouseHack and FAQs and that. Oh yeah, I think right now is the time to better invest in disruptive pricing and disable competitors than it is to harvest the business and take lower sales. We talked about this a little bit in the course member live stream on Friday. And mind you, like, we've got over 3,000 course members who actually watch the course member live streams on a daily basis. There are more course members. I'm just saying, like, people who are watching every single day. It's at least 3,000. It's pretty remarkable, at least Monday through Friday. And we were talking about this we just scratched the surface on it on Friday. But I've just been reading more and studying a bit more. And again, while I think on a macro basis, not the right time for a company like Restoration Hardware, NVIDIA, or Enphase, if there's more panic, you want to at least be paying attention to them. So what I might do is I might buy 1 share of each of those 3 just to sort of watch them in my portfolio on Monday. But anyway, I think it's so interesting. They want to disable their competitors. All 3 of them can do that just by dropping prices and still have fat margins. And they also manufacture in America, which is fascinating because they contract manufacture and they do their own manufacturing. Enphase and NVIDIA are full contract manufacturers. Restoration Hardware has some, which means not great in a recession just because you have a lot of labor, a lot of expenses, And that's why I think they could get even cheaper. Anyway, so 3 that I wanted to pay attention to. We'll get into some Q&A in just a moment. You know, I don't like to be like super long-winded and salesy or whatever. If you haven't heard yet, okay, so give me like 20 seconds here. If you haven't heard yet, HouseHack is offering a 5% yield plus all of the upside in HouseHack stock and downside protection to non-accredited investors. So if you're interested in that, also available to accredited investors, obviously. If you're interested in that, just go to househack.com. You could watch the Learn More video to get a full update on the company. You could click on the Invest button. You could go to the HouseHack Homes YouTube channel and see a lot more. You could scroll and look at the properties here. You want to see before and after pictures or videos or whatever, you could look over here and see that. The wedge deals we've done, whatever. The bottom line is we're going to buy real estate in the 3rd and 4th quarter because inventory is skyrocketing right now, and we're going to have probably a generational opportunity in some markets to buy real estate. I don't think you'll have that opportunity as much in like a California that wasn't really overbuilt, but you will in places like Florida or Texas, maybe even Arizona, have some really big generational opportunities to buy real estate coming up. So we're hoarding cash. I think we're sitting on like $7.5 million of cash right now just to go buy real estate in the 3rd and 4th quarter. And, you know, we pay a yield from the rent that we get on existing assets. So the cool thing about HouseHack now, last quick thing, and then we'll do FAQs. Cool thing about HouseHack now is we're like an actual company. You know, we used to be just an idea, but now we've actually done what I said we were going to do, which is buy houses. Randy says, Kevin, the website is great. Well, thank you. Honestly, like, I gotta, you know, thank the team for that. But I mean, I think we did like 17 different website iterations, and I'm like, that's trash, start over. That's trash, start over. That's trash, start over. And I mean, it was every little button, every little part of the website was just do it over. And so I kind of went like first principles on the website. By the way, mind you, any of y'all, like really, you could steal the design if you want, okay? Like, I don't care. It's not a trademark design. I really like the design a lot. And that's why I made the Meet Kevin website that design also, because I like the design so much, because we just spent so much time on it, and it's awesome. So we really like it. So Mike and Ike says, Restoration Hardware has a great 3D model library that interior designers and architects use to plug in their renderings, which is really brilliant because architects make commish basically off selling, you know, goods from Restoration Hardware, so it's kind of brilliant. Everything College says, Restoration Hardware sells rugs for $5K, my dude. I know, and people buy it. It's like the stupidest thing in the world. Don't play, like, put it this way. Don't buy Restoration Hardware furniture, buy the stock, okay? Every time you go into a Restoration Hardware, not personalized financial advice, look at that desk you want for $4,000 and buy $4,000 of the stock because somebody is buying it. It's crazy. Crazy. Have I been to their flagship store in Orange County? No. You know, like, I think it's awesome. What like, again, I don't own any Restoration Hardware, so it's not like I'm shilling my own stuff. But I keep looking at their financials. I'm like, I can't wait for the next earnings because secretly I hope they tank to like $150, so I can get them even cheaper. But, you know, obviously I don't want anybody to be hurt in that process, you know, so keep that in mind. Kevin Cheney's here is asking about Costco lowering prices. Yeah, you know, we're going to go through a phase of rapid deflation, I think. And I think it's really important to consider that. You're going to go through a lot of price declines everywhere throughout the entire economy, and it'll be accelerated if there's a recession. That doesn't necessarily mean like every asset value is going to crash. I'm not saying that. I'm saying businesses are going to want growth and they're going to lower their prices. And the highest margin businesses are going to take the most advantage of that because they have the ability to lower prices. Like, for example, okay, I know this. Basically, let me put it this way. I'm putting my money where my mouth is. Why do I say that? Because honestly, I think that the Meet Kevin membership price that we're doing, I'm not trying to shill this right now, okay? I'm just giving you an example. This is the Meet Kevin membership pricing. It's all the courses, the alpha report, the live streams, the meetups, you know, whatever, right? These prices here, $2.30, $1.97, $1.67 a day to sort of like subscribe and then try it if you like it. If you don't like it, cancel it. Y'all the trade alerts, all that sort of stuff. That's a very low entry price. Now, on net, obviously over time, you would pay more than if you bought all the courses outright, but there's no option to do that right now. But you might be okay with that because the value is so good. But my point is, the entry price is lower. And so, in my opinion, in this sort of economy, I'm looking going, okay, well, how could you offer services to people at a lower entry while, existing people are still getting a better deal, but new folks also have an accessible opportunity to get in? Well, over time, we could raise these prices, which we will. And then anybody who has an existing membership will keep that price. And over the long term, we'll raise the entry price on these sort of subscriptions here. So it won't be $1.63 anymore. It'll be $2 a day or whatever on that one. And that'll be $3 a day or whatever it is in the future, right? And you, if you subscribed earlier, would maintain your price. Like your price would never change. You'd lock it in. But my point of that is this is a real example of what businesses are doing. Businesses like Restoration Hardware are saying, we would rather have more customers, and maybe we take a little bit less margin up front because that's just the economy that we're in right now. So you sort of adapt. So that's why you see Costco lowering prices. That's why you see sort of broad-based discounting, because businesses are like, we would rather take a little bit less margin and then maybe use artificial intelligence to fire some people and consolidate our customer service, or use robotics in our facilities or whatever to make it up on the cost side. Because most businesses got really fat and bloated during COVID, and they just haven't gone through the cleaning yet, right? So that's going to come. So anyway, somebody here says, should I convert my garage into an ADU in San Diego? Oh, dude, yeah. I mean, like, I don't want anybody living in my garage, but I think converting a garage to an ADU is actually a great idea, because when you sell it, you're gonna make all that money back and more. So would I convert the garage to an ADU and have it be a legal ADU? Hell yeah, bro. HouseHack might do that to all of our single families. We might convert every single home that we buy to either have an external ADU, which we're doing on some. We're actually doing that on some multifamilies where HouseHack is, we're turning an 8-unit into, we're adding 8 units to an 8-unit ADU, or an 8-unit apartment building. We're adding 8 ADUs to it because the lot is big enough. And the city was like, you can't do that. You can't add 8 units. And then we're like, here's the law that says we can. And they're like, yeah, all right. I guess you could have 16 units there. And so HouseHack is like, that's a steal. We just made dollar hollers. But I mean, that's why we're so involved with real estate. So anyway, let's do some more questions here. Kevin, 35K in HouseHack. How much would that be in 10, 15 years, best case scenario? It depends, like, obviously my hope is that it's, 1,000x. I have no idea what it's going to be, 10x, 5x, 100x, whatever. It depends. So HouseHack's vision right now is buy homes and build a really good foundation when there's panic. We think the real estate market, there are going to be some really good opportunities in Arizona, Texas, and Florida in the third and fourth quarter this year. So we're doing nothing right now other than saving cash. We have enough real estate already in low inventory markets. Now we're saving cash to go buy the dip when poopy really hits the fan in those markets. As far as, the longer term, there are a lot of, and there's some other questions here. There are a lot of questions about sort of the longer term for HouseHack. We have so many things up our sleeves in terms of what's coming in the long term when we securitize what we're doing, and when we, whether it's mini funds, ETFs within the company, broker-dealer within the company, our equity hack lending plan. All of those are things that we want to do when we're on the upswing of the economic cycle. I wonder if I could pull up the Meet Kevin real estate site. Meet Kevin real estate site. Let me see if I can pull it up, if I have a picture of it somewhere. I do. That's so funny. You could Google it, the Meet Kevin real estate cycle. So this is the Meet Kevin. Oh, stupid. It's the Mac computer. I'm sorry. It usually works. It's not working right now. I'll just pull it up on this computer. Meet Kevin real estate cycle. When you want, and this is individualized for every market. Instagram really poo-pooed the quality of it. But anyway, let's just use the arrows for a moment. The time you want to get into, like, securitizations and lending, like our equity hack plan, is over here on this side of the cycle. That makes sense, right? Like, you want to lend on the upswing. You don't want to lend here. You don't want to lend here, because you're on the downswing. You want to do lending here. So we have like wedge deal lending plans. That's all coming in the future. Long term down the road. Let's get through this macro cycle first. Right now, all we're going to do is we're going to sit and wait until the third and fourth quarter. Then we're going to buy really good real estate deals in markets that we find are bottoming out. We're going to rent them out after we renovate them. We'll get our wedge deals, 20% discount or whatever. Quality remodels. We'll rent them out. We'll manage it in-house just like we do. And then after we've built that very large foundation, we'll probably refinance everything because we have no bank debt. So I guess it would be finance. And then we'll do it all again. And then we could have, a company that's 4 or 5 times the size. And then it becomes a lot easier to do some of these future ideas that we have. So, plans that we have too. So it's kind of exciting. But hopefully that is a good answer to your question. But this is a real estate cycle, by the way, which I think is really neat if you look at it. I know it's a little blurry, but sorry. But, this is a cycle that's hit Florida and Texas really hard. Look at it. Absorption of excess supply, think COVID. Low vacancies, think COVID. Increased rent and prices, think COVID. Accelerated new construction, think 2022. Oversupply, takes 2 years to build, so think 2024, 2025. High vacancies, that's where you are now in places like Texas and Florida. Oh, and what are you seeing now in Texas and Florida? Declining prices, rents, new construction. Okay, we want to buy right here. This is called the real estate cycle. HouseHack wants to buy when we start seeing that excess supply get absorbed. And then we know we're closer to the bottom for those markets. You are not seeing excess supply get absorbed in Austin or Florida or Phoenix in March. It seasonally doesn't work that way. So that's like, we're not bagging on those markets. We're just saying it is what it is, okay? It's like reading a book. You open the book, yeah, okay, they had a COVID bubble, all right, fine. They'll bottom out, and we'll get to go pick up the pieces, which we think is a good opportunity. Right now, obviously, we're not exposed to those markets. We're exposed significantly more to a market like San Diego, which is awesome because, those prices have been going up over the last 3 years. Anyway. How much did HouseHack raise already this round? To keep the math simple, how much is one share worth from the first round? Okay, so those are 2 different questions. So, okay, the first answer is we're coming up on, I think if we include our accredited investors, we're probably at like almost 2 million so far in the first, 4-ish days of, and a lot of people are still like, oh, okay, I'm reading through this here. So it's actually a pretty good raise already for 4 days. $2 million nearly with our accredited investors in 2 days is kind of remarkable. And again, that's including some pending funds that are still coming in. So which is pretty awesome. I think we're close to like 1.4 in the bank already from 4 days, which is awesome, especially because a lot of people are, again, still digesting documents. They want to ask me questions or whatever. The valuation of the shares, when the company was an idea, it was $1 per share. We offered shares at no premium. We got a valuation in August when the company was still cash flow negative. We got a valuation in August because we were thinking about going IPO in January of between 1.4 to 2 conservatively. So that's already up 40% to 100%, right? Since now in January, at least, we're EBITDA positive, I think our valuation could be even higher than that. But we're giving folks the opportunity who would invest in this round to get in at essentially 140, which is awesome. I think it's a wedge deal. But I also, I think that these big sort of Wall Street, like BlackRocks and stuff of the world, they don't really know about Meet Kevin. You guys know about Meet Kevin. And I think the cool thing about that is when we grow to be a big boy, big real estate company, people are going to be like, damn, I wish I bought in at that lower price. So it's sort of my way of building a legacy, but then also rewarding the people who are part of the journey from early on. That's my thesis, at least. All right, let's go through some more of these questions here. So, restoration hardware looking juicy. It really is. Is there a way in which federal tariffs might be successful? Would companies stay competitive if tariffs? Yeah, sure. There are ways companies can be successful with tariffs. Basically, the best way would be a lot of companies have exemptions because they bent the knee to Trump. or they made Trump feel special. The companies that pulled it off, probably like Microsoft, Apple, companies like this, there could be a competitive advantage to those companies because companies that aren't bending the knee lose. You know, there was just a piece in the New York Times today about how a law firm was fighting Trump and then all of a sudden showed up to the Oval Office, partnered with Trump instead, and now they're on Team Trump. It's like, it's crazy. It's amazing. But there's a lot of money in being on Team Trump right now, and companies are really knowing how to play that. That's how Meta went to $700. They bent the knee to Trump and went straight up for 30 days or whatever it was. It's really incredible. So good questions, good questions, good questions. Let's see here. I'm wanting to get into rental property. I'm working on a $100,000 HELOC. How can I get my first property with such little cash available to me? Well, if you don't have a property already, it's hard to get a HELOC to get my first property, unless you mean your first rental property. Yeah. Usually the best way to get started from an individual point of view, in my opinion, is you start with, you know, like basically 5% down, and then you live there for a year, and then you move, and you do it again, right? The problem is rates are high right now, so it's harder to finance real estate. That's why HouseHack has no real estate, like mortgage debt. We don't have any bank debt. So, do-it-yourself property management. Right, yeah, go ahead. You posted an April lecture. Sweet, I'll make sure I go through that, Flesh. Thank you so much. We'll take a look at that. Would I buy a company like CoreWeave with Robinhood pushing CoreWeave right now? I got the email from Robinhood as well. That is probably the worst time for CoreWeave to IPO. It's sort of like at the top of these concerns over a dot-com bubble, right? I don't know. To me, it seems very risky, but we'll see. We'll see what the financials are when they come out. So a bull-bear indicator, good question. Probably right now on the bull-bear scale, so if 1 is sell everything and 10 is buy everything, margin up, I'm still probably for equity markets, U.S. equity, probably still sitting around 2.5. It hasn't really changed much, sadly. And the cruise lines, by the way, I think they'll do better once we get past all this tariff warfare, because there's so much talk about them taxing ships in a different way. So cargo and cruises, all of them offshoring their corporate, their corporate entities. That's what Lutnick's trying to target right now, and that's what one of the challenges is for some of these cruise lines. So great question, though. Yeah, that's fantastic. So question about the convertible, is 20K, is there a lock period? Yes, the bonds can't convert until I can't remember, sometime in 2027. The docs have that for you. Let's see here. LT says, I'm assuming that the HouseHack bond will be converted to shares if the company IPOs. Well, yeah, because the way you look at it is if the company IPOs, now the company has a free float valuation, right? And that would trigger conversion. Read the docs to get that perfectly. It's very difficult to answer these questions perfectly, but I'm trying to do my best. So read the docs to confirm that, but that's how it should work. As soon as the company has that valuation of over 140, past that minimum date in 2027, that's when they could convert. So wife wants to convert garage to ADU. I think it's fine, but only makes sense if you're planning to move later. She doesn't want to move either. Right. That's my thought. It's like, I mean, if you want to convert it to an ADU, that's fine. I don't know that you want anybody else living there, but you could also convert it to an ADU and just live in both, right? Like throw your 14-year-old in the ADU, or whatever you got going on. I mean, we would do that. So, because you still created another household, and at some point you'll probably move. So let's see here. Okay, we answered that. Let's see here. What do you think about offering owner finances instead of financing instead of renting? I don't like owner financing, mostly because, I mean, you just have to be really careful with how you lend. But, this sort of subject to sales, I've done a lot of videos on this. You have to be careful sort of what you decide you want to sell your property for in an owner finance situation. Are you selling yourself short, basically? So, Elmer, you're going to rent out rooms. Where are you doing that? Provo, Utah? You know, certain markets are very room rental friendly. So comping unique properties, Joel or Joel, I'm sure it's, I mean, it could be either, but I'll go with Joel. Joel's saying, how can you comp a unique property? Honestly, I stay away from unique properties. First of all, I could look at your unique property, but it would take a very long time and it would be a disservice to folks. If you're telling me it's unique, I probably think it's unique. The problem, see, when you buy real estate, you should really be looking at real estate that is easy to comp. The harder it is to comp, the more wrong you probably are. So like, I like buying 3-bedroom, 2 baths or 4-bedroom, 2 baths with HouseHack in a tract neighborhood because it's easy to comp. You know, people are like, oh, but it doesn't have character, or there's a $100 HOA. I don't care. I know people hate HOAs. I love HOAs for the terms of renting them out because they basically police the tenants for you. You know? Now, do I want to live in an HOA myself? Nope. Hate that part. But, and I do live in an HOA, and it's very annoying. But again, it's different if you're renting it versus living in it. So, you know, fair question. Please elaborate on your theory about why there will be a recession. Yeah, I'm going to make a full video on that. And I don't know that there with certainty will be a recession. I'm just saying the catalyst, like, I feel like the fire has been started. And Donald Trump knocked over a barrel of oil and spilled it on it and ignited it and you know, is contributing to some of that. It not only has to do with the declining quits rate, the unemployment rate, which is still stable, but we clearly see the labor market softening in the sense of not necessarily the unemployment rate, but the JOLTS surveys. We've got the PMIs, the you know, ISM reports on what's going on in the economy recently. You've got the inverted yield curve. You know, these are all issues that suggest there's still some fundamental pain in the economy that could, you know, turn into something worse if there's a shock. Who knows? That shock could be tariff related. It could be the Japanese carry trade again, which probably not, because, you know, that's sort of like a gray swan at this point. Who knows? I just like to be prepared for both scenarios because I don't feel like we're in like a 2013 or 14, 15 where, you know, we can expect another 10 years of straight up, but not in public equities at least. You know, I think that's possible in certain real estate investments. That's why I put $5 million of my own money into HouseHack, because not only do I get a 5% yield, but I get all the upside and downside protection, which is kind of cool. That's because it's a convertible bond, right? It converts to stock if it goes up in value, so you get all the upside. It has priority in downside if there's downside, hence the description. And you get paid monthly, which is kind of cool. But anyway, oh, why did you, yeah, there you go. So that was a convertible question. I answered that. Talked about, oh, yeah, it's gonna be, I'll look at your unique property super fast, but it's, I'm not the biggest fan of doing stuff like this. We'll look at it very, very quickly, okay? And we're gonna get to some more questions here. So the question is about a property. This is what we do in the course member live streams as well. So if you have a deal, you can post it and I'll analyze it. I really hate unique properties though. So first of all, let's just go over here and look at it. This is the property. And where is this? So this is Oklahoma City. Got it. Okay. So Oklahoma City, you're close to an airport. This is, you've got a runway. This is a massive airport. You've got, oh wow, they're redoing the runway over here. That's cool. What runway is this? Is this like a new runway they got? Runway 13. So you've got runway 13 that you're basically final approach in, right? So you're pretty dang close to the final approach path, but that might not be that bad. And it'd be somewhere over here. Okay. Then you're right next to an elementary school. That's decent. I hate that this is on a busy street. This is absolutely trash. Like, if you were here, it could be okay. This is terrible. This I wouldn't touch with a 10-foot pole. This is very bad. It's very hard to rent these out. It's very hard to sell these. They always sell for a discount. And then your only buyer how's you buy the, you know what, in negotiations. So I don't like that. Then you've got... Looks like you've got maybe a couple carports or patios or something over here. What do we got? Okay, yeah, carport on this side. But otherwise, it looks like, with the exception of it being on a street over here, it actually doesn't look that unique. It's probably just a pretty traditional, you know, 3 and 2 or something of that effect. So let's grab the Addy quickly. So actually, you should be able to comp this pretty easily. You're just, oh, with a 3 and 1 at that. Oh, come on. All right, well, that means the neighborhood's probably 3s and 1s. So what do I got over here? That's a 4-3. Okay, that's not great. That's a 3-2. So here's a remodeled 3-2, I think. The outside's remodeled. The inside's okay. It was remodeled. Yeah, this was like an this is a... I bet you this was remodeled in 2011 on it. 2013, 2011 to 2013 remodel here, because the carpet's already stained a bit, so you replace the rugs or whatever. But here's a 3 and 2, 244, you know, and it's for sale. It still hasn't sold. It's been on the market for 50 days. It's just sitting here. Honestly, I wonder what it's renting out for. And it looks like they've added on, because a 1969 property was not a 2,000 square foot property. I'm almost certain this has an add-on to it. In fact, I'm tempted to go to the... oh, that's your add-on. Unless it's a basement. I don't know if you have basements in Oklahoma City. But this is what the extra 400 square feet is that you probably have over here. But this is interesting. So here's one on Hillcrest. Let's just go here for a moment. So, yeah, it could be a basement then. Because I can't really, unless that's a flat roof add-on right there. But anyway, so, you know, if you need to find a 3 and 1, man, you know, let's go last 6 over here. Actually, if I could go last 90 days, it'd be better. 155, dude, that's funny. I was going to say 150. That I should have said it. Oh, man, it's cleaned up too. Look at that. Not on the busy road. Decent. You know, it's... I mean, it's a little crusty, but it's decent. Built in 64, it's only 868 square feet. Yours over here was 1140, so it's a little bit smaller, but you're on the busy road. Probably a 150 property, man. You know? Oh, yours actually was on the other side. Hold on. What's yours? Yours is, 1368. Yeah, I mean, probably still. If you got 175 for it, it'd probably be a good deal. Anyway, that's just a super quick look. But, you know, when you've got 250 for sale for 50 days... a lot larger with another bathroom, it doesn't put you in a great position. So, but yeah, I mean, this is like, it shouldn't take you longer than, that's honest. Also, it's not that unique, in fairness. But thank you for saying it. I thought you were going to give me like a farm property somewhere. Those are hard. And we don't buy those. But anyway. So, is there a price that's worth it? Sure, maybe, you know. Major overhead supply for Restoration Hardware, says Traven Fool. I don't know, overhead supply. Yeah, because of the manufacturing they have, maybe, yeah. Just bought a fan at Lowe's. Let's go, Gustavo! I still like Lowe's. I like them a lot. Not necessarily as a stock, but thanks a ton, man. That's around what I came up with. Dude, that's awesome. I only spent like 5 minutes on it, but that's awesome. Can you 1031 into HouseHack? No, not at the moment. I said a few days ago, if you really wanted to 1031 into HouseHack, email us, ir@househack.com. I have to check how many people responded the last time I asked that, but right now, no. Let's see here. Aqua Estate, I don't have that handy. We could find out on what kind of floor we have right now. It is an LVP, yes. That's almost exclusively what you're using, what we're using now. Thoughts about 6-bed board and cares in the neighborhood? What? Those 6 bedboards and cares in the neighborhood. Oh, in that one, or are you talking about everyone? Okay, let's see here. Would you be able to share which investment bank gave the 1.4 evaluation? No. And what would the earliest versus longest you'd be willing to list house? 2028 to 2030 is my goal. And when we get to... like, if we're in a recession in 28, 2030, in that range, then we'd probably go to, like, 2032. But my goal is this decade. That's my goal. I wanted to IPO for my birthday this January. But then, you know, I got a little nervous that the stock market was at peak. And I'm like, no, kill the IPO. And wow, sure enough, at least so far, it looks like year to date, the market peaked out. So I'm like... let's see here. Let's see here. Kevin, would be awesome to get some ideas as ways to lower the amount of taxes I owe from income I get from my rental properties. Any good tax strategies? Well, do you have a side hustle? You know, are you an employee? What's your business? There's a lot here. I think most people could benefit from having a side hustle that they could write things off on. Most folks who are W-2 don't have a side hustle. But if you have a side hustle, at least you could start expensing stuff. You know, and you know, talk to your boss about it. Like, hey, do you care if I have this little side hustle or whatever? Sure, you know, whatever. Say, let's see here. Let's see. Have you heard about 18-year real estate cycle? Oh, I mean, everybody has a claim. You know, if you heard 7 years, I've heard 14, 18. You know, it's market by market dependent. When getting HouseHack off the ground, what was one unexpected problem / challenge you had to overcome that others might want to know if they plan to start a business of their own? That's a great question. I feel like that's an interview question. That's awesome. It's really easy to overhire. And I think that was a mistake we made with HouseHack. We've solved that. But, you know, when we were deploying the $50 million of real estate, it was really easy to say, like, oh, we need the staff. We really didn't need that many people. So we definitely overhired and overtrained. We didn't need that many folks. Whatever, it's been solved. Won't happen again going forward, right? I mean, at least we've learned this lesson. But it's fine because, you know, now we have such a really great core at HouseHack that not only are we now EBITDA profitable for January, hopefully the whole quarter, but you know, we're in a place where we're just loading up cash for buying the dip. I can't wait to go back to buy the dip, you know, the song. So it's gonna be fun. There's gonna be some cool opportunities. Let's see here. Rose says, I want to invest 14 from one account, but 6 from another. Yes, you could do that. Email us at ir@househack.com and we can handle that for you. So, I don't know what you mean, HouseHack plus estimated property value by 20. Oh, I mean, I don't think there's a doubt that at some point we'll get to $1 billion of real estate. I mean, think about it. Like, if right now we have $60 million of real estate with no bank debt, if we just cracked the egg and financed it, we'd be at, you know, I don't know, let's see, 60 represented equity of divided by 0.3, let's say. That's 200. That's $200 million right there with what we have right now. That's crazy. So I think that's freaking awesome. Like, you know, then we only have to 5x from there. And what we've had this real estate for a year, and we've got 5 more years until 2030, and all of that, and the systems and procedures that we've built together. I think it's totally possible. Somebody who says, I bought a 2-family in October. You're going to rent out the rooms on, did a decent renovation, tried to add value. What's my next step? Well, I mean, okay, you didn't rent them out yet. Well, the first thing I would do is I would evaluate the profitability of doing room rentals versus just renting out the units themselves. You know, if it's a multifamily, you know, how much extra time do you have? If you want to babysit, do the room rentals. If you don't want to babysit, rent out the rooms individually. And you'll still be babysitting, but it won't be as bad. Like, you know, a lot of people are like, I make so much money renting out rooms. Yeah, you're getting paid to have a job as a therapist. It's pretty bad. Let's see here. Failed science, 2.5 is bearish. Yes, it's on the bearish side. So let's see here. I have a rental house with a mortgage and live in a house with a mortgage. What's the best way to secure funding for that job? I mean, it depends what the value of your properties have done. HELOCs, it depends what your income is, right? Would be awesome to get. Okay, we answered that. Let's see here. I have a $240K paid off house in Palm Springs making about 4%. What would you do in my shoes? Yeah. I mean, I'd probably wait for rates to be lower, and then I try to crack the egg and take some financing out of it, you know, and deal with it at that point. Can you still invest with Bitcoin, HouseHack? I don't know. I think we have an account with Coinbase, like an investor account with Coinbase, but I don't know that we've never taken a dime of crypto. But I wonder how hard it would be to do that. I don't know that it would be very hard. You know what? If you wanted to invest in HouseHack with crypto, email us at ir@househack.com. We'll get you that answer. Let's see. What are your price targets for TLT in a recession? I mean, you know, like even just a not soft landing puts TLT at 110, 120 in my opinion. A nasty recession where they have to cut to zero, it's 140 plus, 160. So it goes, but it happens fast is the problem, you know. So let's see here. Thoughts on Berkshire ETF Omaha? Berkshire ETF, that's interesting. I'm sure it has nothing to do with Warren Buffett in terms of like, it's not something he did, right? But what is it? Oh no, it's Vista Shares has it together. Okay, Vista Shares, 1%, 0.95 basis point expense ratio. This is targets 15, select income fund, actively managed fund, blah, blah, blah. What are the holdings? Mirrors the 20 largest holdings of Berkshire. I mean, that's funny. So the largest holding, 9% weight, Berkshire, then Apple, American Express, Bank of America. I mean, it's smart. They basically just created a mirror image fund of, the top 20 holdings of Berkshire. Smart. I mean, talk about riding coattails. So Jessica B says, when is HouseHack closing this run? Look, I don't want anybody to feel pressured, okay? Call me the no pressure agent, just like I was the trademark no pressure agent for a decade. I don't want you to feel like there's a rush to invest. Take your time. If you have questions, ask the questions. Get your questions answered. The benefit of investing earlier, in my opinion, is twofold. One, you diversify away from the craziness of these equity valuations, potentially. And number two, you get the 5% yield. As soon as your investment is accepted, you start accruing the yield. So the people who just invested, $1.5 to $2 million or whatever it is over the last 4 days, they are already accruing yield. They'll get their first partial check in April and then their full check in May for April, right? Because interest accrues. So, okay, let's see here. Disregarding Doge, do you think DC, Nova, DC area is interesting because it changes so rapidly. You've got this ultra high end, and then you've actually got like really, really low end. So I have not been to DC in like for real estate purposes in quite a while. I was just in DC for a broker-dealer conference, FINRA conference, but a regulatory conference. But, for real estate, it's been a minute. So I'd be hard-pressed to really give you an update on that one. I gotta go there. It's one of the cool things about me being able to fly now is, for example, yesterday I flew to Arizona and back. With a pro pilot with me, I learned their insights, I learned their tips or whatever, but I'm flying. I'm like, don't touch my throttle, don't touch my flaps, and I'm doing the radio comms, and I'm flying, right? It's just the flexibility of how fast we can actually be boots on the ground anywhere. It's really amazing. It's even faster now that I can fly. It's really incredible. Okay, we answered that. Let's see here. I'm sure I'm missing some questions here, and I apologize about that. So, do you think we will ever get back to valuations based on companies' fundamentals? Yes. This is a great question. 110%. We are, so detached from fundamentals on great companies, mind you. But a company like Palantir, for example, is totally detached from fundamentals right now. That doesn't make it a bad company. It just means that it's very, very expensive right now. And I love Palantir. I love their product. But, I mean, they're way overvalued. I do want to give you catalysts really quick. This week, I want you to pay attention to... Okay, we get the March preliminary... Oh, this will be good tomorrow. Oh, snap. 6:45. So when the market is open, oh, boy... Oh, we're going to play some trades tomorrow. Oh, this is going to be fun. S&P Global Manufacturing, Services, and Composite PMI coming out tomorrow at 6:45 a.m. March preliminary. It's going to be an SH9T show. That's going to be fun. So futures are pretty green right now. Dude, that could tank them. That could be a very interesting trading opportunity. By the way, this is also stuff that we talk about in the course member live streams. We will be live in the course member live stream tomorrow, which is why I say if you haven't yet, you know, be part of the Meet Kevin membership. I promise you, this pricing right here will be higher in the future, and you lock it in forever if you get it now. But the Meet Kevin membership gives you everything. The course member meetups, all courses, every trade alert, every private live stream, every alpha alert. It's a bargain for what you get. This is a bargain. But we'll be talking about those numbers in the morning. And if we are green tomorrow morning in pre-market and those S&Ps come in bad, puts on the Qs with a stop loss are going to be really interesting because they could print a lot of money. You know, the calls I got on the Qs when Donald Trump talked about flexibility on tariffs, they were up 125% last week. It was a small bet. It was like, you know, 5.5K or whatever. So I think the profit on it was like $6,900, which is awesome. But you know, for a quick trade, that's awesome. So anyway, you can see that over there. So those will come out tomorrow. S&P Global Manufacturing Services Composite. On the 25th, we'll have the Real Estate Core Logic 20 city averages. I generally don't pay attention to those because I look at market by market. I don't care about the averages. I need market. Real estate is so different. You need market by market. I was in Phoenix yesterday. They got some work to do. But that's going to be a potential buy the dip area for HouseHack. Not yet, because it ain't bottomed yet. Soon. Okay, on the 27th, we get GDP for Q4. I don't care about that. The 26th, that's Wednesday. Durable good orders, they're expected to be negative 1%. That's pretty bearish. So that actually could beat because the estimate is so bearish. And then we get PCE. Wow. Is this already the last week of the month? That's crazy. Anyway. All right, so we'll be covering that. That'll be interesting. Okay, good. And then obviously soon after that we'll get Liberation Day for, I guess, the United States. When is Liberation Day relative to today? It's Liberation Day, according to Donald Trump. Nobody knows liberation of your stock valuations better than Trump. Is a week from Wednesday. So, wow. All right. Very well. Okay, so let's see here. Let's see. Okay, what other questions do we have? Can HouseHack be bought in a self-directed IRA? Yes, it can be. A lot of people are actually buying it in their Roths or their 401ks. You just have to use a company like Directed IRA or whatever company lets you self-direct. Directed IRA is our recommendation. But that's not official, like, you know, there's... Use whatever you want. I don't care. It really doesn't matter to us. I know, Jessica. 69. I know. It was fine. I looked at that. I'm like, oh, that's funny. Is HouseHack in need of an architect? Currently, no. Thank you, though. Do you think Lockheed Martin can recover quickly from last week's sell-off? Well, because they lost the F-45 or F-47 or whatever contract to Boeing. I can't believe they gave that contract to Boeing. Who gives a contract to Boeing? Sorry. Boeing doesn't have the best reputation right now. So I thought that was a little odd. Kevin, my portfolio is 50% Tesla. I will break even if I sell now. I'm down 50% from December high. Should I sell Tesla and invest elsewhere? I mean, you know I can't tell you what to do, but 50% exposure to Tesla is a lot. You know, you've got what you really need for Tesla to go up because their valuation is high right now. Like on a manufacturing car basis, Tesla's a 135 stock. And then you have to ask yourself, like, are you going to get margin called at 135? Or can you buy the dip at 135, right? You buy the dip. What you really need is Tesla to deliver now on Robotaxi. Like, what you saw with the 480 was a sample of the hopium, the euphoric rally and a short squeeze. That's what you just had. Now you have to actually get to reality. Best book you've read that's helped you speculate? Oh. I actually don't think it's... honestly, I'm a very big reader on a daily basis of like journalism. And I'm not talking like fake news, you know, like you watch a clip from CNN or Fox or whatever. I'm talking about like foreign affairs, The Economist, you know, what Goldman Sachs and Morgan are saying, Morgan Stanley's, JP Morgan's, that's the stuff I love reading. Earnings calls from companies. So it's sort of like the book of life almost, if you will, in the finance markets. Financial Times is decent. The New York Times is decent. I know they get a lot of hate. Like Republicans hates the New York Times. Republicans hate the New York Times. The New York Times has shit on me. It's almost an honor, you know. But they in some regards have some good pieces. You have to pick and choose. Like I don't know why I still have this on my desk. I had an ad from Hims and Hers because we were doing a course member analysis on GLPs, and so I found this. This was in the Sunday, March 16th edition for the Times. But I read the newspaper almost daily. You know, I think it's very important. It's like if your only reading is Twitter, you're killing yourself. Like at least be 50% like Doomberg or Reuters or Associated Press, and then the other 50% can be Twitter. The Market Ear does really good charting on sort of TA. I think a lot of people watch them, which is good and bad because sometimes things play out in a way where it's like some of their moves are already priced in. At least that's just what I found. So I need an app that summarizes all. Yeah, you know, it's funny you say that. It's not really out yet. I don't even know if you can right now. Probably not. But we're gonna have an app that comes out, and it'll consolidate sort of like the videos and news and stuff like that. So that'll be really cool. And it has a really cool like built-in task feature in it, which is really cool. Because I hate all of the task apps that exist, and we're doing something unique that's never been done before, which is cool. It's built in the app, so it'll be really cool. So, let's see. Obviously, HouseHack is involved in it. HouseHack's like my Berkshire. Like, if you want exposure to Kevin, HouseHack is your exposure to Kevin. Let's see here. What else? Okay, we answered that. No. Grant is asking about when can you convert the bonds for HouseHack. They have them. We can't convert after Q3, Q4, 2025 because there's I don't think they can convert until 2027. You have to look at the paperwork, but I'm pretty sure it's 2027 is the earliest that they can convert. So no, you'd be collecting the 5% yield for a while. Flesh is saying buy shares for the Kevin personal portfolio. I don't want equities right now. What I want is Restoration Hardware, like we talked about at the beginning of the video, but not right now. I want panic. I want blood in the streets before I buy Restoration Hardware stock. It's a $4 billion company. You know, I want it to tank. So, what does it feel like pushing forward the throttle of a jet? That's a great question. It's very anticlimactic. Okay, how weird is this? When you throttle up on a jet, you'd probably think it's like, oh! It's like, honestly, kind of lame. So, when you're center line on the runway, you're clear for takeoff, brakes set, because I like to do static takeoffs where I see what my engines are doing first before I let go of the brakes. I put my throttle in, and it's kind of like this. Full throttle. 1, 1,000, 2, 1,000, 3, 1,000, 4, 1,000. Oh, here we go. It's honestly like a Toyota Corolla where you hit the gas and you have to like wait 2 seconds to actually move, except it's like 3 or 4 seconds. It's the weirdest thing. Like you'd think jets, because it's a jet, oh, it's got to be fast. You'd think they'd be really fast. A propeller plane is way faster on the go than a jet. Way faster. It's insane. Obviously, that shifts very quickly. By the end of the runway, I'm going 2 times the speed of a propeller plane. but it's just that initial launch is kind of sad. So yeah, that's a good question, but it's still kind of cool. Like I say, what's it called? What am I trying to say? I like to say that the experience of flying it is way better than buying it. Like buying stuff, I don't know, doesn't do it for me. Although the wedge deals I like, but that's part of the experience. It's like doing wedge deals for HouseHack, right? But stuff doesn't do it. Like I don't care. Bigger house, plant, who cares? None of that stuff matters. It's people, experiences, building a company, building HouseHack. With HouseHack, upon investing, if you hold the bond past APO date, if shares are lower than the initial price, do you hold the bond until the expiration date? Is the yield locked in? Yes, good question. Good HouseHack question. So here's the thing. Let's say HouseHack goes public and it's trading for $1.30 and you have the bonds. They don't convert. You just keep getting your 5%. And if you hold them to whatever it is, 2030 or 32 or whatever it is, you get that 5% yield until then, and then you get your money back. That's the cool thing about the HouseHack convertible bonds. Did you have any anxiety starting HouseHack? Nope. Because it's like I've been doing it for, 11 years. By the time we started HouseHack is 11 years. Now it's like 14 years. HouseHack ever work with a firm? I don't know why we would ever work with a firm. Do you think that the Connecticut housing market will fall? Yeah, these specific markets, I kind of really got to be there. So... Okay, Chank says, Kevin, I'm thinking about investing in HouseHack. This will be my first time investing in a private company, so I'm trying to understand one more thing. How and when can I exit? Okay, 2 ways. Number 1, you sell the shares to somebody else privately that you find. I think for the accredited round, you could do that after 6 months. The non-accredited round, you could sell the shares if you want, like the next day or the bonds or whatever. Or just wait for an IPO. So you kind of got to wait for the IPO is what most people do. But that's how private investments work. So I've invested in private companies in the past, and you kind of just sit there and hope that one day they IPO and you get a check. That's usually what happens. You often also usually don't get updates. Like, it's kind of dark. I've invested in a lot of private companies. As soon as you give them their money, you hear nothing. I've been providing updates on HouseHack for 2.5 years. Transparent. What we're doing, problems, successes. So I think we're pretty unique in that because you just don't see private companies do that. What do you think about REITs? REITs are great, but it depends what they're holding. So real estate investment trusts give you there some benefits in terms of taxes for the distributions. You're not buying wedge deals unless you're getting the REIT for a really discounted price. You're buying a wedge deal on the stock in that case. But the REITs are often not buying wedge deals, so they're not doing what HouseHack's doing. REITs are a tax strategy. You can't 1031 into a REIT, so I prefer the Delaware statutory trust so people can 1031 into them. But they're a great vehicle. Like, I think the way you have to look at HouseHack is not as a real estate investment trust, because it's not. It's a real estate company. HouseHack in the future might have 10 different REITs that we own, and we use them for tax strategies. It's kind of like an LLC, right? Like Berkshire Hathaway, might have 10 different LLCs. Well, they probably have like 1,000 different LLCs. The point is just think of them as little entities, right? But from a tax point of view, holding mortgage bonds or real estate in a REIT as a corporation is great. It's C Corp taxed as a REIT. It's fantastic. How does HouseHack keep renovation costs cheap? It's hard, and some budgets go over, some budgets go under. It's a lot. I would love vlogs of you flying around looking at real estate and giving your opinion. Okay. Q3, Q4. We'll do it. Let's see. Maybe even sooner. Okay, what else here? Thoughts on buying a phase 1? Yeah, I love phase 1 new construction because you can't really go wrong. Like, worst case scenario, you put $5,000 down. In 2 years when they're ready to build, the values are down. Keep my $5,000. Or they probably even give you the $5,000 back. No guarantees, obviously. Should regular people buy Cybertrucks? I love the Cybertruck. Would I spend $75,000 on a car right now with where we are in the economy? No. HouseHack is going to develop ADUs. We're doing 8 ADUs. 4 ADUs, might do some more single ADUs, and then we're going to do we're also going to build from the ground up one property as well, in actually a ski resort, and then we'll rent it out. I think that one's going to yield a lot for HouseHack, not only on wedge value because we got in before that place really blew up, but also just long term because of the way we're going to renovate it or build it. I think it's going to be very high quality but affordable, and that's going to be a great opportunity for HouseHack. But that'll also build HouseHook's book of business for development. Now all of a sudden HouseHack, in 2 or 3 years from now, HouseHack's going to be able to say, look, we built, whatever it is, 12 or 15 ADUs. We built, a luxury property from the ground up, and we buy deals and renovate them. It's all part of the HouseHack valuation that we're building for that long term where, wow, they buy wedge deals, they securitize real estate, they institutionalize real estate, they, maybe even have a lending side to the business, they are a developer. Like, when you look at what HouseHack is doing in all of, like, the licenses and stuff that I've got in the past, all the experiences I have in the past, all of that's going to be under the umbrella of HouseHack. Like, HouseHack in the future, I see creating financial products on Wall Street, like ETFs or REITs or whatever. And it basically, could be like, I like to see it as sort of the noble version of like a BlackRock or something like that, where it's like actually improving trashy properties that people can't live in and giving people great properties to live in, and adding supply to cities by building more homes. So really excited about what we can do with it. Obviously, we just have to get through whatever this next, process is. But I think that's why people have an opportunity to invest now in HouseHack at what I think is a low valuation. Because you got to get through the uncertainty of this next few years here. The cool thing is, I don't think we have a lot of risk because, again, January we're EBIT profitable. We got a lot of cash. Out of a $60 million real estate company, we've got an extra 7 sitting around in cash flow positive on the real estate. Our OPEX is really low, in my opinion, and the opportunities are huge. So I think the risk is low, but I'm biased. I run the company, So, yeah. All right. So, Kevin, for somebody disabled who has maybe 500K but zero income, what would the best way to make passive income off of that be? Okay. So, this is not personalized advice. I don't know your situation at all. But if I were disabled, and let's say I was 50 or 60 or 70 or whatever, I don't care, I would probably go all in on like the 30-year bond right now. What's the 30-year bond yield? Dude, 4.6%? I mean, obviously, selfishly, I think you should put a little bit into HouseHack because you get 5% on a yield and you get the potential upside, right, in the stock. So, like, as an example, who knows? Let's say you put 100 or 50 or 25 or whatever into HouseHack. That has at least like an egg that could hopefully grow very largely in value over the next 10 years or 5 years or whatever it is through IPO and beyond. But honestly, if I'm in a place where, let's say I'm a senior, I'm disabled, I don't want to take on risk, again, not personalized advice, I don't know your situation, like the 30-year bond right now is yielding you 4.6%. You lock it in for the next 30 years. Okay, think about that. Okay, I'm selling HouseHack short here because the answer should be all in on HouseHack. I'm just kidding, I can't do that. That's not realistic. But 4.6, that's $23,000. That's like $2,000 a month, plus Social Security or whatever, maybe disability or whatever you're getting, right? Dude, that's good money. And then if yields, if rates collapse because there's some kind of crisis or whatever, the value of your bonds actually goes up. I don't know. To me, it's desirable, but you have to also be careful though, because a lot of people in a situation like that, they become disabled or something happens or whatever, and they've got this nest egg of say 500K, and then somebody's promising, oh, we'll make you 20% a year or whatever, guaranteed. And then they lose all their money. So, you have to be careful about things that are offering these like ridiculous yields. Like there was one we were looking at, I think it was the EARN ETF, and They are offering a 17% dividend right now, but they're investing in CLOs, collateralized loan obligations. They used to be a real estate company. Now they're throwing all their money into CLOs. It's basically like a 2008 all over again in that company. I'm like, why the heck would you touch that? So, how is the Jet compared to the Plaid at launch? The Plaid's way faster on the start. Way faster. So... let's see. I think about investment. Okay, answered that. Okay, I know I might be missing some questions, but you could sell the bond if you're an accredited investor. You could sell the bonds at any time after 6 months. Correct. If you are a non-accredited investor, you could sell the bonds immediately, anytime afterwards. 5% until converted. If not converted, you still get 5%. Correct. Still 5%. That's correct. So let's see here. Nike, do you think is dead? We just did a Nike analysis in the course member live stream. Okay, I gotta go soon. Kevin, your thoughts on selling crypto for all different investments? Okay, look. This is gonna sound blunt. I told this to course members the other day too, but it's my opinion, so I'm not like guaranteeing anything here. But my opinion is that crypto could potentially wipe out a lot of people if there's a recession. Okay, if there's a recession, crypto will be the absolute worst performing asset, in my opinion. I'm not trying to be anti-blockchain. I'm not trying to be anti, Solana or Ethereum or digital gold or whatever. But I'm just going to be blunt with y'all. It's all bullshit in a recession. Like, all the crypto is going to be exit liquidity for people who are panicking because they've lost their jobs. They can't finance their lifestyles anymore. They need exit liquidity. The hope of the Trump put is gone. The Trump administration isn't going to buy crypto for a strategic reserve if we're in a recession. It's a very bad recession edge because there are no earnings. Now, U.S. equities aren't much better. Now, that doesn't mean there can't be a big buy the dip opportunity at the bottom. But I'm just saying, there are some people who are going into a potential recession. We don't know if there will be, but there's some people going into a potential recession all in on altcoins. And I'm like, you have a complete chance of going to zero in a recession. And they're like, nah, man, it can happen. I'm like, okay. So that's my opinion. It's not, again, to be anti, your token or whatever. This is when the people in the comments often are like, you just don't understand it. I'm like, no, I understand that when you have a product that relies on the greater fool theory and there's no underlying asset or, function that is going to help you during a recession, then what good does it do you? Now, when it does well again is when the Federal Reserve comes in and bails everything out and, maybe J-Pal starts buying crypto. That's when you want it. But, and look, if there's no recession, good. Hey, maybe we could go back up to the moon then, right? But do I want crypto exposure going into a recession? Hell no. Especially because what's going to happen to Michael Saylor? They're going to go belly up. That's just my opinion. I was invited to an event to invest in Happy Dad. Oh, that's cool. Isn't that their beer? Why are they taking investments for that? It's interesting. Yeah, you have to be careful with drinks, beverage companies. Look at Celsius stock, okay? Celsius stock is your best example of what you have to be careful of. They could rocket ship, but they could also collapse very, very quickly when somebody else comes along with, a slightly better drink. So there's a little moat is what I'm trying to say. And I'd be curious what the valuation is. Why don't you send me? I don't know if you're allowed to. Or you just send it to me anonymously, okay? Send me anonymously if you're allowed to, or if you don't care. The stuff to staff@mekevin.com for the Happy Dad stuff. I'll make a video on it, okay? Send it to me anonymously. Go make a Proton Mail email, whatever you want, and I'll make a video on it. And, yeah, I'll do a whole video on Happy Dad. Oh, God. No, Joe's asking about the first round. Joe, you got a great deal, man. If you're in the first round as an accredited investor, you have a dollar basis in the company, you have a great deal. It would take you, 7 or 8 years of yield at the 140. And honestly, I still think 140 is a great deal. I just invested $5 million at 140. If you're in at a buck, you got a killer deal, and you're doing really well. You're probably up double, because I think 140 is low. That is the low end of the Wall Street valuation we got. But yeah. So should I sell my property, rent, or take out a HELOC? I mean, it depends what area you're in, right? Do you have any exposure to crypto? Hell no. Was I unclear about what I just said? Do you foresee any potential risk with HouseHack and housing regulations? No, I foresee zero risk, because whatever the rules are, we will figure out how to make crappy homes great. What do you think about equity in home builders? Toll Brothers, Pulte Group, I like it. I like home builders. I don't know what the valuations are for them right now. I'd have to look. I'll look for you really quick. But I like home builders. Let's see. And they don't sell for a book value multiple. They sell for an EBITDA multiple, which is delicious. All right. I work in the beer business. Happy Dad doesn't sell. Don't tell anyone I told you. Thanks, man. Thanks for the heads up. What doesn't surprise me, if that is true. To say... I mean, this is a clown world comment, in my opinion. So this, to say that crypto has no value in a recession just proves Kevin knows nothing about cryptocurrency underlying assets. Many believe crypto is the future, bro. That's fine. That's why I preface this with, I'm going to get the comments of Kevin just doesn't research. I have read the white papers. I get it. It's not going to perform well in a recession. That's my opinion. I could be wrong. I will be willing to be wrong. But if you are 100% in crypto going into a recession, and maybe we don't even go into a recession, I think you're going to have a lot of pain. That's my opinion. All that thrust on the phenom and the throttle is no fun. That's right. So, 50K and you're 21, what should you do? Invest in yourself. Not personalized advice, right? But what are the top things? Number 1, invest in yourself. Number 2, in the meantime, while you figure out what you want to do, park it in some kind of money market. Number 3, when people are panicking in markets, you could buy the dip. Number 4, my favorite, is try to get into real estate. My opinion. Like, can you buy a condo for $250,000 and get started? So, I like that. Kevo, I already have a house, hence 100K HELOC. I'd like to purchase my first rental, but it's not a lot to get started. It's plenty to get started. I mean, can you move? Right? I mean, 100K is a great start. You should be able to buy a rental with that. Is there a minimum amount of money needed to invest in the HouseHack as non-accredited? 20K. 20K. So, where were we? Okay. Couple things. Remember, if you have extra questions on HouseHack, you could just email us at ir@househack.com. If you want more details, there are 2 things you could do. You could press this learn button and watch the What is HouseHack video. You could also go to the YouTube channel HouseHack Homes. And if you go to the HouseHack Homes YouTube channel, you could, see the videos that I post there as well. So there are 2 videos there. There's the Learn More video, but then also on the HouseHack Homes YouTube channel, where that one is listed, you'll be able to see, those are 2 videos you could look at. So HouseHack Homes YouTube channel and the Learn More video. Okay, those are 2 good videos. You can see the properties and everything at househack.com. If you want to invest, you can press the invest button over here. If you are accredited, you can press yes, and you don't even need a new accredited investor letter if you are investing more than $200,000. You want to get that yield. Just a reminder, how that would work is if you invested $200,000 at a 5% yield, you would be getting $10,000 a year in yield, $833 a month, plus the upside of whatever the stock does, which I think is pretty cool. Yeah, that's if you're accredited. If you're not accredited, press no, and you go to the non-accredited page. Okay? Tells you more about HouseHack. Pretty straightforward. These are real properties. You can see our real properties. You get the details. And over here, you can read the offering circular or the PPM. Pretty straightforward. You click on the offering circular. Boom. Wow, there it is. PDF. Great. Nice and easy. Same thing if you go to invest. You hit, you go to invest and you hit the Reg D button. You hit the PPM. And it's the box link. I hate that it's the box link, but it's also a PDF. Boom. It's right there. Okay, great. So then if you want to join the Meet Kevin membership, and lock in the low price that we have right now, which you lock in forever, guaranteed lowest price forever. You can go to meetkevin.com. You could lock that in. You'll be part of the course member live streams every single day, part of the trade alerts, all the courses, course member meetups, alpha reports. You get all of it for pretty inexpensive price. It's like $1.60 per day or something like that. So go to meetkevin.com to see that. So HouseHack, meetkevin.com, and that's what we got. So thanks so much for being here, folks. That's all I got for us today. And Rose is asking, can you invest with a credit card? I prefer you don't invest with a credit card, but yes, technically you can invest with a credit card. So yeah. Very cool. Okay, cool. So I think that's what we've got. Thank you so much for being here. Let's just say it's 38, 1.5 million cash, no debt, house and car paid off. Where should I put my savings? Currently sitting 4%. Wow, dude, $1.5 million and no debt. Dude, you're in a great place. Good for you. I mean, you could do a lot of things, right? You could start your own side hustle business. You could look into buying real estate. You could look into, private equity investments, a stock market, diversified stock market portfolio. There's so much you could do. It's incredible. So you're in a great place. Good for you. But you can also talk to a financial advisor and get personalized financial advice. Anyway, thanks for being here, folks. We'll see you in the next one.